What's up everyone? Today we'll be talking about the large-scale sales from the promoters of Indian companies over the last few months. We'll also be seeing how this links to the record amount of debt raised by companies over the past year again, and what implications this could have for the market as a whole. Let's get going. So we know that the promoters of Indian companies have been selling their stakes at a record pace, amounting to over 83,000 crores in 2023. That's a lot. In fact, that's the highest ever. But weirdly, this has not affected the stock prices in a meaningful way. In fact, many shares have as much as doubled in value post-promoter stake sales. But is this sustainable, or are we just waiting for a delayed response? To answer that question, we have to look at the reasons behind the sales by these promoters. For example, a sale in GR Infra is not suspicious given that the promoters had to reduce their stake as mandated by SEBI. Similarly, the Gangwal family selling their stake in Indigo is not surprising or to be frowned upon because they had a falling out within the founders. The M&M promoters selling their stake at a time when everyone believes that the Indian auto industry is just about to take off, that's suspicious. A similar trend has prevailed far and wide with promoters of Vedanta, Whirlpool, CMS Info, Adani selling for apparently no reason. But there is a reason, and I for one was not surprised by this volume of sales. There are clear signs of a global recession ahead, and a very large one at that. It is perfectly understandable that promoters want to book some of their profits when they can. Makes sense, but I didn't want to make a huge decision about my portfolio based on a single metric. To confirm if we're really looking at a significant downturn, I tried to build a pattern of behavior among promoters right before such downturns. Here's what I found. Promoters' sales are a very common factor throughout late economic cycles, but not the only pattern that repeats itself. These companies are known to raise huge amounts of debt as the end of the economic cycle approaches. And why? Well, my understanding is that towards the end of the cycle, as interest rates rise, some companies can't afford to pay off their old loans, so they borrow more money. Now, this money usually comes at a much higher interest rate, which means the short-term cost for these companies rises exponentially, and they're forced to make a lot more money very quickly. Now, if a recession strikes at this point, it's highly likely that the companies will not be able to keep up with their loans and will default. This is what turns a recessionary correction into a full-fledged crash. Coming back to the behavior of promoters, the large-scale loans that these companies are raising could be the cause for a larger correction in the market, whereas the fact that promoters are offloading their stake simply confirms that those in the know that something is coming. This of course does not mean that there is a reason to panic or that the market is going to crash immediately. If you look at the charts that I talked about some time back, there's usually a few months lag between the Fed cutting rates, which has not yet happened, and the market correcting. So if I've bought a stock with a 5-year perspective, I'm still holding on to it. Because this is not the time to be hyper bullish, but it isn't a time to be hyper bearish either. But if I've gone into a company positionally, I'm going to trim my stakes on bounces. But hey, I'm not a SEBI registered advisor, so please do your own research before investing, and I'll see you next time.